Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Thursday, happy Aloha Thursday, April the 13th, 2017, and this is the Daily Report for Gold and Silver, our weekend review. We are coming to you with a earlier weekend review, one day earlier in observance of Good Friday tomorrow, which of course will make all of our markets closed. We had an interesting week, a lot of events, and we had gold prices surging, breaking above former resistance at about 1261 and breaking and closing above the 200-day moving average. To net changes in pricing, we've got 1289. That is most active futures contract, closing up about $11 on the day. It is traded quietly with a low of 1280 and a high of right around this particular price point. When we look at net changes in terms of spot prices, 1287.17, net change about $1 higher, and that is truly the net change from yesterday's close in both markets. Silver continuing to surge, trading up 21 cents at 1851, so that's right at a critical resistance area. And then when we look at spot, spot is trading up about a nickel at 1850 with a low today of 42 and a high of 1860 on the day. So traders, I certainly want to talk about the trade that we put on at the beginning of the week. But before that, I really want to go over a longer term historical perspective, because this week was truly a historical week in terms of the technical indicators. And the fact of the matter is we had two major things occur this week on a technical basis. The first thing that occurred, of course, is we had identified, along with other analysts, some pretty superlative resistance in the market, roughly at or just above 1260, 1261. We can see this top that came in the end of February, unable to really go above that, and that was the high point for the year. Of course, the market came back down, traded to a low of just below 1200, I believe about 1190 to 1195 in that area before beginning this climb here. And as it began the climb, on many occasions, it not only flirted with this particular price point, 1261, but 1261 also became the 200-day moving average. So when we see the activity that occurred recently, meaning just 2 days ago, in which the market broke above this particular price point and did it on a closing basis, meaning not only did we trade above 1260, but we closed above 1260. Well, that was the first time we had really seen gold prices go beyond our 200-day moving average, break above this substantial resistance area, and then climb not only yesterday, but hold those gains today in light of a U.S. dollar that really gave up much of the weakness that we saw yesterday and then, of course, at the beginning of the day. Now, consider this. When we take this long-term historical perspective, we can see that it has been quite some time since gold prices have traded above the 200-day moving average, and that really occurred in November of last year. This, of course, is the election right here. You can see this large spike. Once the news came out that Donald Trump became elected president, this market spiked up roughly $50 on the day, only to not only see that erode, but break below the 200-day moving average over subsequent days, and then trade down to an area of 1120 or so on the market. A dramatic price move to the downside. Towards the end of the year, though, this being December of last year, this being the first day of January right here, we saw the market not only bottom, but begin to really rise. But realize that this rise, this subsequent fall, and this dramatic rise all were contained below the headwinds of a 200-day moving average. Of course, the 200-day moving average is the average that most technical traders use to define long, broad stroke moves in the market, whether it's bullish, bearish, or in the case where it trades above and below whether it's a very, very choppy market. And it's not until this particular point in time, meaning mid-April, when the market has substantially broken through and closed above its 200-day moving average. And traders, lastly, I do want to briefly go over our current trade. Early this week, we did take a stab and entered the market from the long side. Of course, what we were looking at and the basic parameters that we had talked about was we needed to see an effective closing price above the former level of resistance and the 200-day moving average, which sat at around 1260. When the market breached and broke above that earlier this week, as it moved up, we sent out a special trade recommendation. We recommended that clients get long the most active June futures contract, and that was trading roughly at 1273. That is our entry point. Our stops are below this particular level that we're now labeling as support, 1260. The market now has closed at 1290, so substantially higher, about a $17 gain on the trade this week. And as we go into this long 3-day weekend with so many events possible, obviously my recommendation is to maintain our long position and to maintain our current stop. In terms of our upside target, though, these are the particular price points that we're looking at. We breached some different levels that we thought could possibly have some resistance, the 1278 area, and we've got multiple fib retracements. But what I want to draw your attention to, in this particular case, is not so much a fib retracement. However, what it is a particular price point that, in terms of a historical basis, has shown us either very, very strong support or very, very strong resistance. And of course, you and I both know that support and resistance are part and parcel of the same thing. This particular price point, roughly at 1310, really has a hard line of history in that you can see multiple occasions in which this particular price point served as a supportive manner. And this, of course, is when gold was trading at the highs back last year of around 1380 and oscillating between 1380 and 1310. Here we get an equal high, then we get an equal low, but a lower high, equal low, lower high, and then finally, as you can see, when it broke hard because you see this significant candle coming in, and this, of course, comes in prior to the election. This is occurring at the beginning of October, a tremendous fall from grace as the market trades lower and doesn't find any kind of support until about 1249, which is a 50% retracement, and it is a retracement of the longer move. And by the longer move, what I'm talking about is a move from 1380, that's the beginning of this fib retracement, down to these lows at 1120, and that's these hash marks here, the longer hash marks. We then, of course, have a shorter fib retracement beginning from these bottoms here, but only moving up to the former tops here. And then lastly, we have a fib extension, and the fib extension begins at the lows achieved at the end of last year up to this high at 1260, and then we take it down to the correction. We start our extension from this particular price point here, and then we mark our certain levels, 78% right here, a 1-to-1 relationship, 1.23 and 138. And these are different targets that are possible in terms of this dramatic rise that we are looking at currently in gold. Now, gold has substantially broken above the 200-day moving average. Our next real level that we want to take a look at is about 1300. But when we draw our line across 1300 for any kind of historical data, we don't really find anything except this one small top, which in fact rises above that particular price point. However, when we look at this particular area at 1310, we can absolutely see that that provided both support as well as resistance back last year. And so for that reason, my official target right now on this trade is between, call it 1305 and 1320, that being the 78% retracement of this longer move here. My recommendation, once again, is to maintain our current long position and to maintain our current stop. I want to wish everyone peace and goodwill over this extended 3-day holiday weekend. We will talk to you on Monday for another daily update and review. Bye-bye.